Devin, welcome. You basically think the stock can still triple from here. Why is that?
Hey, Kelly. Well, first off, I think we have to think about why the stock's gone down. I think you hit on a couple topics that people are focused on, the fundamentals, potential regulation, and a little bit slower retail activity. But I actually think that's much less so, which we can talk about. I think the biggest driver of the stock decline recently has been more technical. When they went public, there was only 70 million shares in the float. And from the end of October to the beginning of December, essentially all of the additional shares. So now you have about 800 million shares that are in the float that can be traded. And you have a lot of potential selling pressure from that because you had investors that invested in the company as a private company. In 2017, it was $1 billion company. They raised capital at the beginning of even this year at less than $12 billion. So you have a $16 billion market cap today, which is still significantly up from where a lot of the private investors put money in. And so I think that there's just been some selling pressure from that. The reality is the fundamentals have not changed very much relative to what we've been thinking. The first half of this year was really special. It wasn't something that we're expecting to continue every quarter, but we think the fundamentals are actually still quite strong here. And we think there's a lot to come in 2022. So I think it's distinguishing between the technical pressure and why the stock's gone down, which is more than, I think, fundamental issues in our opinion.
But what does it tell you when the revenue drops 40% quarter on quarter?
Well, I think what it says is, we're in the first inning of Robinhood's journey here. They have already amassed over 22 million customers, but the brokerage business is inherently volatile, which is today, the biggest driver of the revenues. But as you think out over the next couple of years, they're adding so many other features and revenue drivers to this business model. And I think that's the big picture. They want to become the single money app. I think they're in a position to be one of the leading players in that, in that framework. I think that it's not a winner-take-all market. There will be others, but trading can be volatile quarter to quarter. And third quarter was a quieter quarter. We were actually expecting that, and the fourth quarter I think is going to be better than the third quarter. And then they head into 2022 with a bunch of new products and features that they're launching, which are going to drive incremental revenue opportunities. And I think there's a lot also that's going to come here that they're not showing their hand on. They tend to put products out or announce products, and then their competitors copy them. So I think they're being pretty careful about what they're telling the street.
Sure.
And so there's a lot more to come here.
But if you're buying Robinhood on your $58 price target, are you buying today's business model or a yet-to-be-disclosed business model of the future?
Well, I think you're buying the future as you are, with any growth stock that you're looking at in the market. You're right. You have to be able to think about what's the addressable market and what is their opportunity to compete in that. And we think Robinhood has a number of areas of differentiation. They have a huge balance sheet that I think they're going to do acquisitions over the next year, and they're, as I just mentioned, going to roll out new products. And so that's really what it's about. That they have to be able to deliver other products and services that really their customers want to use, which, I think there's evidence around that. They're doing very well in cash management. Their IPO access product is seeing traction. We think that on the crypto side, they've already seen some very early signs of progress on the crypto wallet, and I think some of the other things that are going to come on that front. So this is going beyond just trading. We think that they may add NFTs and a number of other features like that, which no one's really talking about right now. So right now, everyone's focused on the third quarter. That's the last fundamental data point we have from them. The stock's gone down, not just because of that, but because of all these other technical factors. So I don't think it's going to take much for it to go up quite a bit from here.
Shepard Smith here. Thanks for watching CNBC on YouTube.